We are live with Cengiz Dinçoğlu from Dexalot, the co-founder of one of our favorite dexes on Avalanche, and I'm so thrilled to have him here. I was a very early supporter early on, and it's so exciting for me to see that Dexalot has gone multi-chain and has moved into new ecosystems. I'll say a few words about Cengiz for as his background. He is a reformed TradFi gentleman. He spent 12 years at JP Morgan Securities from 2000 to 2012, and he was a specialist in proprietary trading and statistical arbitrage, which he later parlayed into Dexalot. And then spent time as a consultant at Morgan Stanley before starting Dexalot in about 2020. Cengiz, thanks for your time. Thanks for joining us.
You. Well, thank you, Nathan, for having me. It's very exciting. First of all, I just want to say that nothing I say is a financial advice.
Here we go.
A disclaimer. This
Nothing.
This
is financial advice.
Yeah, not solicited investment, right? Just like you said, yeah, I want to little bit just like quickly introduce myself. I worked in Wall Street for 20 years, mostly like you said in JP Morgan. I held various positions during my time. My team built, for example, a good portion of the tech side of the program trading, which is also called basket trading business, where we process $2 billion a day in spot equities. And that's where we want to get to in Dexalot as well. One day, hopefully.
If I could encourage any former TradFi person who's named themselves after an amphibian to process $2 billion a day, I would be thrilled.
Yes, I will be thrilled as well. So later on, I jumped ship to statistical arbitrage trading as a developer / quant / trader, because that's where my heart was. I wanted to not just build, but also trade. So I ran my own high frequency pairs trading strategy for a while. I also built high frequency FX trading platform. In addition, I help other quants incorporate their futures or options trading into their models from a technical side. So in short, my time in Wall Street, in the context of Dexalot, when you think about it, has been instrumental. I'm lucky enough to be in a position where I can think like a trader, understand the business, understand the needs, and spot the inefficiencies in business flows. But I also visualize the technical side, the potential architecture, what can be done, and how long it may take within minutes. So it gives me a little bit of an advantage. So fast forward, 2020, I really didn't want to see myself another 10 years in the corporate world. And to be honest, I have a hobby, hydrofoil kite racing. So
okay.
And I wanted to do that as well as, work on my own business.
So if you're doing hydrofoil, can we sponsor you? Because Landslide is sponsoring surfers and other extreme sport folks.
Sure, you can sponsor me. I wouldn't say no to it. I mean, my last international race was 3 years ago, to be honest. So I am very out of shape and out of practice. But yeah, of course, I'll take sponsors. So there's no, we can put your name on my kite. Anyway, the other one was to build my own applications with a friend of mine that lives in Tampa, and I moved from Manhattan to St. Pete. And St. Pete is the mecca of this hydrofoil racing, right? So that's when I got involved for the first time with blockchains, Hyperledger. So that's when I understood.
I'm sorry to hear that.
I know it was the first one. I know what can I do. So,
I also hit IBM Hyperledger, and as soon as they tried to sell you a piece that you couldn't just get for free, I was like, "This is
yeah." So I mean, mine was like a lot rudimentary than that. It wasn't really that level, but at least I got to learn, like the blockchain's promise, what it really promises, right? And I fell in love with it. And then 2020, we got together with my friend for 30 years, Nihat Gürman, who is the other co-founder of Dexalot. and starting to build on this new chain called Avalanche back then, right? We started very, very small, but one thing led to another, and we were live with the first version of Dexalot on Avalanche C chain at the end of December, around December 21, and we had done it with only 4 people. 2 of us, Nihat and I, plus 2 other developers.
That's amazing.
Just that. And 4 years later, we are now about 20 people, and we are the first of its kind and Omni-chain DEX.
Amazing. Well, Omni-chain CLOB DEX too.
CLOB DEX, yes. So maybe I should tell our listeners what is an Omni-chain, or what is Dexalot?
Sure.
If you permit me. Yeah. So CLOB is Dexalot is a CLOB DEX. CLOB stands for Central Limit Order Book. So it is an order book DEX. It looks and feels like Binance or Coinbase, but it happens to be fully on-chain and non-custodial. So we take the best of both worlds, in other words, right? And not just that, we are omni-chain. So we're not multi-chain, we are omni-chain. So let's talk about the current environment a little bit, right? As you know, there are tons of L1s, and new ones are coming live, it seems like every day. Just name the majors, like three years ago: Bitcoin, Ethereum, Avalanche, Base, BNB, Arbitrum wasn't there, but anyway. So what is the end result of this proliferation? For the lack of a better word, they all show silo characteristics. Liquidity is fragmented, and there is a decent amount of maxi behavior, perhaps dictated by the chain-specific acts. And people started trying to solve this problem, right? They said, oh, let's go multi-chain. So, and they tried to replicate solutions for the new users in the new chains, right? For example, if you're an AMM on Avalanche, you want to go multi-chain, what do?
Pray.
Well, replicate not only your technology, but also your liquidity to be competitive. If you're not, so you have to double your liquidity for each chain. Every time you bring one, you need as much, if not more. And on top of it, there's you have the problem of interchain communication, moving funds around. People historically, they use central exchanges. You know, you can just deposit from one chain, withdraw from another. You can use DeFi bridges, obviously, native. They come with their own risks, and if not the risks, but liquidity problems. And there are cross-chain dApps that's kind of addressing this problem. So every other application are multi-chain, but they are not omni-chain. That's where Dexalot is unique. We have a single shared source of liquidity among all the blockchains that we are connected. And we are technologically so efficient that we can connect to any EVM chain and list any token from that EVM chain within hours. I repeat, hours is all we need technically. You know, if we solved all the other, some liquidity, market making, all these other things, we line them up. Technically, that's all it takes for us to deploy to a new chain. So I guess the talk was about how do we build this, right? And I can go into it, or I can, like, if you have
I'd love to. If you want to show any demos, like, we'd love to see some demos. And
sure, I'll show some. Yeah, let me first say a few things. So yeah, how do we get there? Obviously, Rome wasn't built in a day, right? We had the idea was that we all had problems with central exchanges. Forget the big events with FTX, like FTX collapse. SEXs don't provide us with enough transparency. And at times they can even block the withdrawals as they please. So we wanted to have an order book DEX as an alternative. That was the first idea. And at that time, and maybe still, Avalanche was the only blockchain, Avalanche C chain was the only blockchain that could support this kind of quick finality and cheap gas.
But why not Solana?
Yeah, why not Solana? Well, as you know, the reputation of Solana, sometimes, like, it crashes, like, it halts, you have to restart, all these things that came to us as feedback. So we didn't want to be in that environment, to be honest. So we are in Avalanche now, right? Based on this, so we deployed the first version again in December 21 as a proof of concept, because in order book DEX, a central challenge is the market making on an order book DEX. It's not like an AMM, you create a pool and that's it. You don't have to, like, you leave it alone and it just does its own thing, which is great. But for an order book DEX, for the price efficiency that you want to get, if you want to get efficient prices, you have to have active market makers. Otherwise, you will have a very wide order book, and then it will not help anyone.
Now, aren't many market makers in Uniswap losing money?
I mean, they may be losing money. I don't know their statistics, but why, if they're losing money, why would they trade? That's like for just I mean, overall, they should be making money. Maybe they're losing money from trading, but from the not mining, but from the rewards, maybe they're evening out or making more. But I'm not sure what they do, to be honest.
I've heard that from some LPs that also that Uniswap's own business model is somehow eating itself because of the way that they've structured their DEX.
So your question is not on the market makers specifically, but
well, it was sort of both.
Okay. Yeah, I heard that too, to be honest. Uniswap is not, I heard that they're not profitable to this day, even with the volumes and fees that they have. But from a market making side, yeah, I can only speculate. From the market making side, if I was a market maker and I'm losing money with something, I wouldn't continue trading. I mean, that's the end of it, right? But from Uniswap business perspective, that may be true. That I don't know. Yeah.
Sorry, I didn't mean to interrupt your flow, but
no. It's better that we have this, back and forth, because I don't want to bore our listeners too much. So market making on order book DEX is pretty much is like, as an analogy, I would say, is like fishing. You're casting a fishing line. You send an order, and if you want to be competitive with your pricing and stay current with your pricing in your order book, if the market price moves, they move a lot, you have to reel it back in, bait your hook again, and cast it again. And you have to do this thousands of times for each order book. Otherwise, your prices are going to be competitive, or you're just going to lose your bait and you're out of the market, right? So from Avalanche C chain perspective, it worked. Technically, it worked. And even with these cheap gas prices that they provided, it wasn't feasible financially for a market maker to market make. And we were 100% on board from day one with Avalanche's vision regarding app-specific elements. We knew that that's where we want to get to. But we first wanted to release what we had in mind and show the world that this is possible, this is doable. So yeah, we decide, and as soon as these back then called subnets, they were ready, and we were on our L1, which was February 23. So all of a sudden, February 23, we became dual chain order book DEX, right? So we are in L1. And all the problems, like every L1 suffer from very similar problems, right? First, ERC20s. So how do you solve that problem? Like USDC. You want to bring in USDC, you can call Circle, say, hey, I have an L1. I would like you guys to deploy it. And if they like you, maybe they'll deploy it. Or you just say, okay, I'm going to make a bridge. You either contract a bridge or you do it your own. And then the problem with that, USDC cannot be a USDC on your L1. It has to be a version of L1, USDC.E, which is like, it comes with its own complexities and bridge risks and all these things that people talk about all the time, right? And for a small L1, such as ours, it really didn't make sense. Any of these didn't make sense. And I was like, that was a big challenge for me specifically. And then I was thinking, there is a protocol that I used in TradFi called FIX protocol, Financial Information Exchange Protocol, where people send each other, your application send each other messages regarding how they want to trade with each other, right? An order, an execution. And you can also send some generic messages. There are some formatted messages, or send some generic message within fields in FIX. So to cut it short, basically, I didn't want to deal with any ERC20s. And I said, since we are on our own L1, we don't have to deal with any other dApps for the foreseeable future in our L1. So why don't we keep this as a closed system and communicate between chains using generic messages and instead of bridging tokens? So that's the patented architecture. That's the basis of the patented architecture for Dexalot. Basically, what we do, let's just say it's only C chain and Dexalot L1. On C chain, when you deposit to Dexalot, we lock that token on the originating chain. We do not bridge it. We send a generic message that says, this guy has deposited $100, 100 USDC, and he can trade with that 100 USDC in the subnet. So the counterpart smart contract in the subnet or L1 knows about the credit of that address, and it keeps track of every execution, every transaction that it does. And at the end, if the user wants to withdraw whatever token they purchased, they go back to the deposit contract in the mainnet. When you think about it, for it to be
that's how IBC works too.
Yeah. Okay. So for it to be equal, somebody, like if you're exchanging your USDC with AVAX, subnet, the RL1 needs to have both tokens deposited from, and the sum of all the tokens in our L1 is equal to sum of all the tokens deposited in Avalanche C chain. So that you can circulate between those numbers, like you can do millions of transactions, it won't matter. These two things will be always equal. So that's the basis of our architecture, and we solved it with that. So that's how I say we can list any token from any EVM chain because we don't need to bridge it. We don't need to provide liquidity. If you deposit it, it's tradable. The other problem that L1s always face, the initial gas token when you bridge your token, right? So we implemented quick logic in that one as well. When you deposit, and if the address in our L1, your address has no gas token, so we drop a little bit of gas token into your address, and you can start trading. But we didn't stop in there. As you trade, you send orders, you send executions, You send cancels. As you trade, we wanted to abstract this completely. If your balance in your wallet goes below some threshold, we automatically keep depositing your gas token. So you technically don't even have to deposit any gas token or deal with your gas tank, in other words. And you can potentially forget about the gas tank, right? That's like an additional feature that we wanted to add.
So it's subsidized.
It is not necessarily subsidized. So we have like complex algorithms, like, if you have a lot in your portfolio already, we just withdraw it to your gas tank, which is simple. There is nothing subsidy.
Okay.
And if you are trading with another token, then we will swap them, and then you will just pay the market price. So but the amount is so minuscule, like 0.1 a lot, because its current value is like 5 cents, 0.1 a lot. So we only drop 5 cents worth of a lot, and we charge you 5 cents of USDC, for example. Yeah, so that's very minimal. So we sold that initial gas and more with this. Now, one big problem with L1.
Wait. I just want to recap that for our listeners. So the way that the two pieces that you shared was you didn't want to deal with ERC20s. You would rather have people bring them over, lock them, and then mint them in the Dexalot layer 1, right?
Yes.
And that you would
it's not necessarily minting, but it is just a credit in the smart contract,
right?
For that. Yeah.
And the second piece is that you never wanted people to run out of gas, so that you figured out a way to credit the gas system to the L1 with just a smart contract credit.
Yes,
Great.
Exactly. So those are the two challenges that we fixed. And then the third challenge is, how do we get people into our L1?
The great question.
Right? How do we get it? And if they don't want to come for any reason, can we tap into the liquidity on the C chain via aggregators?
Yeah.
So when you talk to the aggregators, they don't want to, first of all, we're an order book DEX, we're not an AMM. So they have to change their whole model to integrate with us. Plus, we're on our L1. So it's like, a double-edged sword, even more, it's pretty difficult for them to, especially when they're trying to onboard so many AMMs or different chains and all these things. So instead, we said, we will provide an interface for you so we can trade, we can publish our prices on the C chain directly as if they were on our subnet. So this is what we call, that was a big piece, a simple swap. We call it simple swap. It has a swap interface, literally. When you go to our front end, it has a swap interface. I will show you in a minute. And at the same time, that's our conduit to aggregators. It is an RFQ model, if people are familiar with it, a request for quote. So we publish the prices that we see in our order books. We publish the prices from off-chain application, not a contract. And aggregators, they request, simple quotes, what we call simple quotes, just as an information. But if they want to trade, if anybody wants to trade, they have to request a firm quote. So with this firm quote, we hold that price without slippage. Currently, we didn't slip any price so far for almost a year now, without slippage for 20 to 30 seconds. Okay. And if the firm quote requester wants to take the other side of the trade during those 20 to 30 seconds, they can, by a similar interface as an AMM. If they don't, they can let go the trade. But if they do that too many times, we blacklist them, obviously.
Okay.
So you cannot request a firm code and not trade with us after a few times, basically. So with that introduction, simple swap, at the end, around September, October last year, our volume started getting huge. And with the simple swap now, we
and this is really important, because I think we as traders want everyone to adopt it, but people are just not into it. They're just not going to do it.
But they just won't do it. Exactly.
But a simple swap will work, especially for coin operated agents like AI agents that are trading.
Mm-hmm. Yeah. So now to this day, actually, we were doing volumes around 400,000 a day, maybe last year this time, and now we 100x it. Now we can do anything between 15 to 50 million a day. Those are our volumes now. Yeah,
I saw that. I saw the new statistics, but that's simply amazing, especially because a lot of the forgive the pun, but a lot of the feedback we receive from being outside trying to connect Avalanche to IBC is, why are you building on Avalanche?
Yeah. We get some of those feedbacks too as well, but yeah.
So as a former TradFi person yourself, like, how do you envision the future of the Omni-chain DEX in relation to institutional trading? This is the great question I've always wanted to ask you.
I mean, institutions, like, there are the different types of challenges with institutions. I think Omni-chain DEX is the future. No matter what, you have to have a shared source of liquidity. You cannot keep fragmenting it. But we strategize about this, and when the time is right, maybe we will implement it, given we have the right partners. For institutional, you have to have KYC
Bingo.
flow. KYC flow, no matter what. So
Bingo.
L1s in general, it's perfect for, like, when I say L1s, Avalanche L1s are perfect for KYC flow as well, because you can.
This is the great piece here, is that when in our marketing, people are always like, no, Avalanche is the KYC chain. It's like branded as a horrible idea, but how else are you going to get JP Morgan to trade unless they know it?
Yeah, exactly. So I don't understand why they would think that Avalanche C chain is a KYC chain, to be honest. Why they would say that? It's like, that's public. But yeah, in a KYC, like in a KYC environment, then you can bring institutions if they would like to. Like, but for me, from what I see, if you want institutions to come in, you have to have an institution as your partner.
Yep.
Otherwise, I don't think they will come in. So we have to, and we have a great executive team, and three of us, we spent over 6 years in Wall Street, and our connections and everything. I am confident that we will find those partners when the time is right.
Yeah. Well, here's a sort of follow up to that. Do their liquidity pools also have to be KYC'd? Like Enclave Markets does full KYCing for the onboarding into liquidity. Does that have to take place as well?
Yes, definitely.
Yeah.
So anybody who is depositing funds or withdrawing funds, they need to be KYC. You cannot have it otherwise. There cannot be any dirty.
Yep, exactly.
Stain. That's not that. It's just this, hint of a stain on any transaction.
Yeah. So I guess what attracted me so much to early Avalanche was Goon and Kevin describing how institutions would run their own layer ones. They used to call it purple. If you wanted to run a purple layer one, it became purple, and that was the requirement. When Landside's been connecting to IBC, we've seen relayers as the main sort of break point there, where we want institutions running their own relayers as well, so that they can have KYC relayers if they want to accept those type of funds to access these type of funds from outside.
I see. I mean, the way I would do it just simply, with the current architectures that we have. I think the way I would do it now, I would have a list of addresses that can deposit, right? And those list of addresses we can update anytime. And as they are KYC'd, of course, it's gonna be a separate L1, most likely. So there's no commingling of funds. Or maybe it's the same L1 but a separate smart contract. I don't know yet, but it is possible. They're most likely separate L1 because of the performance. Yeah, and yeah, that will be it. Literally turning our infrastructure into a KYC. We just have to replicate just for institutions. That will be it. And then we just put a trusted addresses list in the deposit, and that's it. There is nobody else can deposit, and everything inside our L1 is KYC by default. As simple as that. So yeah. Should I continue, or do you have any other?
No, fantastic. I have my own opinions about that, and I'm glad to like share those. Share that with reality.
Yeah,
but
yeah.
I've been sort of on the reg tech train for a very long time, and it's like there's no other way to do it other than that. And if you know, that's why Avalanche is so important to it.
Yeah, I agree. I mean, Avalanche, I think maybe I'm a little maxi on this for this statement, but I think Avalanche L1s are the future.
Yep.
I mean, that's how I look at it, because literally you cannot service all different types of applications, all different types of requirements in a single chain, or L2s, or variations, and this and that. Like, I mean, to me it's so obvious L1s is the future, but you know, a lot of people, because either whatever their reasons are, I do not agree with them, but L1s are going to be the future.
So do L2s parasitize the L1s?
Parasitize?
Is it a parasite on the L1? Is an L2 a competitor to the L1?
To Avalanche L1?
I mean, in general.
In general, I mean, I saw L1s as a facilitator to non-performing L1s, like Arbitrum to Ethereum, rather than parasitizing it. It's actually making it more viable. I mean, that's how I saw them until now.
So you see it as a scaling solution.
You ask this question. That's my impression. Like, you know, Arbitrum to me is not a parasite to Ethereum.
But Goon has always said this, right?
He might say, but to me, it is making it work, because there are no other way. Yeah, it is. At the end of the day, the transactions are taken from Ethereum to they are committed to L2. That's like a parasite behavior, but I cannot see any other future for Ethereum if they don't have an L2. How would they survive with this high gas prices? I mean, everything has to be so slow, meaning all the applications that it's developed in Ethereum, they have to perform very slowly and very efficiently.
Well, the
gas, right?
The other way they could do it is by changing their consensus to Avalanche consensus.
I mean, they can do that too. Yeah. So yeah, the slowness, like basically. So to me, it's not a parasite, but it is actually symbiotic relationship. Let's call it that way. Like, some parasites are actually so vital to the host, right? Yeah.
I think it's interesting to me to see how this is going to shape up, like, because there's only so much capital inside crypto that keeps changing hands, and everyone keeps waiting for their bags to go up with institutions. but institutions are not going to hold all of this stuff. Like they want to just trade their own bags, you know. So it seems like everyone's kind of a little misaligned on that.
Yeah, I agree.
Anyway, I'd love to see any. Fantastic.
Sorry, you got cut off. What'd you say? I'm sorry.
Yeah, I'd love to see any demos.
Oh, okay. Let me give you two more things, and then I'll jump in the quick demo.
Yeah.
The other challenges like liquidity, additional liquidity, and market makers, contracted market makers. The challenge of a DEX or order book DEX. We contracted so far 3 market makers, professional market makers.
Do you care to share which ones?
I'm not going to share it if you don't mind. There are more integrating, and we have lots of people. We even released a bot code base that you can market make our own. And we also talked to we talked with the Humming bot, so they have Dexalot as one of their targets. So you can trade in Hummingbot in Dexalot.
Great.
They are rewriting the code to simplify certain things.
For those people who don't know, explain Hummingbot a bit and why it relates to AI.
Hummingbot is an application where you can trade, or they have different strategies, one of which is market making. And they have like arbitrage strategy as well, for example. So they connect to all different exchanges, including central exchanges and DEXs. And your strategy can monitor prices from different exchanges and arbitrage between them quickly. Or you can do liquidity mining, like in Dexalot as well. You market make and you get rewards. So that's what I wanted to add next. We have an incentive program for people who are market making actively in Dexalot order books. We call it DIP, Dexalot Incentive Program. It's basically just entering orders. You don't have to be executed. The closer you are to the mid, and based on your size and closest to the mid, you get higher rewards. This way, we are trying to beef up the quality of our order books, basically. So, okay, third version of our application was the Omni-chain version, where we deployed to Arbitrum as well as C-chain. And this was this last April, and we added Base after that. So, and I'm going to talk about the challenges of Omni-chain while I'm giving you the demo. Okay.
Great.
Okay. So. Okay. Let me take the. Okay, I guess. Okay, so you can see Dexalot front end, right? At dexalot.com. I put you on the right side. Okay. All right, this is the production version. So this is not testnet, so I'm not going to execute any transactions, full disclosure. So as you can see, this is just like when you go to Binance or Coinbase. This is a typical front end that you will see, and these are all the pairs that we have listed currently. I picked ETH USDC, and do you see this shaded area, blue shaded with the blue shaded lines? This is our DIP, Dexalot Incentive Program. So if you enter any orders in between these threshold and the pop-up in the DIP, it tells you the details, DIP max and DIP min, the price that you would put, and also gives you additional information. So if you enter any order and later on cancel that order and not execute at all, you will be eligible for some a lot rewards at the end of the day. And you can keep track of that reward, the rewards in the leaderboard over here. So this is the incentive program. And when it comes to multi-chain, omni-chain is, let's start with a simple deposit. So these are my balances. So when I say deposit in the Dexalot, I can deposit from any of these three chains. Let's just say Avalanche. And
our job is to get, our job as Landslide is to help you get any chain over there that we can.
Okay, yeah, that will be great. So, and here, as you see, from Avalanche, I'm depositing wet.e, but in our Dexalot L1, it is going to be shown as ETH.
Great.
Okay, that's important because that's the other challenge that we fix with the with these omni-chain sister symbols from different chains. So you deposit wet.e and it goes to the subnet as ETH, or I can deposit, I'm going to start again, from Arbitrum. From Arbitrum wet, it's going to be shown as ETH in the subnet.
So you're consolidating all the named conventions of all these assets into a single pool.
Yes, a single pool, capital efficiency. That's the name of the game. So here in a single order book, I can service wet.e, and any other symbol from any other chain, bridged or non-bridged. Obviously, their risk profile have to be the same. For example, BTC.B and WBTC don't have the same risk profile, so we couldn't combine them.
Good man.
Yeah. So, but for wet, we didn't have that problem, so we combined, and we can service this with a single order book.
And for those listening, why is wrapped Bitcoin and Bitcoin.B different risks?
It's all about, I guess, in who do you trust?
You're supposed to trust nobody. That's the whole point.
But at the end of the day, who do you trust? That basically there is someone behind these wrapped versions, right?
Yes, exactly.
A bridge or a corporation or something behind this behind these wrapped versions. And at the end of the day, that's who you trust. BTCB is backed by Avalanche heavily, right?
Yep.
So in myself and in the market in general, BTCB as in my eyes, as a more credibility compared to WBTC.
Yeah. So the background here, especially in the last month, was BitGo announced that they were part of a 2 of 3 multisig making wrapped Bitcoin, and everyone went nuts.
Mm-hmm.
Yeah. Which is why the risk profile is different.
Yeah. Yeah. Exactly.
In Osmosis, by the way, they call these assets alloyed assets, where they kind of put them all together to try to create capital efficiency.
Yes, and they have different risk. Like they do not accept more than a certain percentage from a certain network. So if they have like 20% from this network, or 20% not network, I'm sorry, 20% from ETH.E, for example, and 30% from only wet.
Yeah, that's right.
And the rest from native ETH or something like that. So the combination, when they hit a certain threshold, they don't want to pass that. So that was interesting. For the tokens that we have listed so far, we don't have that need, but that could be something that we may entertain as we list more and more tokens.
Great.
Yeah.
And so when someone so you were showing when someone wants to deposit from base, what's the interoperability solution that's used there?
Oh, okay. So right now, that's a good segue to something else that I want to talk about. Right now, we bridge everything, not bridge. We send generic messages using layer zero bridge. So let's go back to here, deposit Dexalot, base, wet. So you see bridge type, layer zero.
Do you know which
Now,
DVN you're using?
DVN?
Layer Zero has a digital verifier network. They have 36 DVNs who are the people who are, or protocols that are verifying these messages.
So we are using their default
Yeah.
settings, but
So this is Google.
we specifically there was a big thing around layer zero about a year and a half ago, maybe, that they could change these default settings if they wanted to, without telling us, and that was a big problem. Like, people made a big deal out of it. So after that, we locked those settings that we were using just to
Good.
be compliant, because they suggested that we lock them as well.
Good.
So their default settings we are using exactly as they are. We're not changing them,
Smart.
but locking them so that nobody can change those default settings without our permission.
Great. Good.
So yeah, soon, I mean, this is not going to be base, but soon, if you wanted to deposit in Dexalot from Avalanche, the bridge type is going to default to ICM very soon, maybe in a month. ICM interchange messaging, interchain messaging, which is Avalanche's default protocol, which is much faster than layer zero. Teleporter, yes. They call it now ICM. They rebranded that as well. So a teleporter, yeah. We're trying to not use the teleporter anymore, but that's called ICM, and they call the token transfer as ICTT.
Yes.
I guess work messaging, and they rebranded as ICTT or any combination. But basically, ICM is the component that supports generic messaging. We're not bridging tokens. So for any Avalanche communication to any Avalanche L1, the default is going to be ICM.
Yeah.
But you can still use layer zero if you don't want ICM. And the good thing about this is, like, you can deposit with one bridge and withdraw with another. It really doesn't matter. We are bridge agnostic. We can keep adding bridges in here. They all send a generic message for us. So there is nothing, as long as the bridge is secure, the message that we send is immutable. And we used to check the ordering of the messages as well, but not anymore. As long as it's immutable and we're good, we can implement any bridge. We can add any bridge here.
Good. As for anyone who's wondering why we're talking about these nuts and bolts here, this is the part where things, it's the high risk area of the system. So Avalanche warp messaging, teleporter, ICM, these are all terms for how Avalanche layer ones all talk to each other. So, and it's only specifically within Avalanche. Our job at Landslide is to connect that messages to IBC, which is which has a ton of volume outside of Avalanche. So our whole sort of conversation here has been, how do we bring liquidity safely from Avalanche, outside of Avalanche in, and make this sort of longer vision that Cengiz and I have been talking about, to get it out of Avalanche, because our conversation here is very sort of inside baseball, but it's also where we think the future is going. So that's why that's why our team spent the last couple of years building Landslide to fix that.
Very cool. Yeah, we're probably working on the same problems and with different different versions of it,
Yeah.
right? Because sometimes fascinates me that the solutions that come up from different, in a way, siloed teams.
Yep.
Yeah.
Well, the good news is we're going to be open source, so we're open sourcing our light client
Oh, that's great.
basically in a week. So that means that anyone who we finished our Halborn audit, so that's going to be open source. So that means that any token transfers will go through our EVM to Dexalot over Warp, Teleport, or ICM.
I see. Okay.
Well, great. I know we're coming up on the hour here. Are there other pieces you want to share?
So same thing when you want to withdraw it, same thing. You can withdraw to any chain, whether it is Avalanche or any other base. Like, so you can deposit from Avalanche and withdraw from Arbitrum, basically. So we have to implement some inventory manager for that. I'm not going to get into too much details because I want to talk about a few other things. And you see all your inventory of each token from each chain, what you have, like wet.e from Avalanche, wet from Base, or wet from Arbitrum. What else do I want to talk about? Simple swap. So simple swap is the interface, like I said, for people who are used to AMM interface. And in the background, aggregators are attaching themselves to this technology. So that's how we provide liquidity. Now, what's coming up very soon as well, we built a cross-chain single-click buy and a single-click sell for Gunzilla specifically. And from any chain, so you can, from Arbitrum.
So wait a minute. For those who don't know, Gunzilla is the first cross-platform, so PS5 and Xbox game ever, and then it's also built on its own Avalanche L1. It's a AAA rated game, and it's basically trading skins, gaming skins.
Yeah. So they're going to be launching very soon. I don't think they're launching the token yet, but for them, we specifically built a flow where you would buy with your gun token from any network with your USDC. And your gun will be delivered with single click into your wallet in Gunzilla L1.
Great.
So this is a cross-chain swap, and we're extended to all other tokens. So cross-chain swap will come very soon as well this year. So
that's fantastic. I'm an investor in Gunzilla. I'm thrilled to see this.
Yeah, we were really we were so excited to see this flow, but Gunzilla kept postponing their launch, and now they're postponing their token launch. So we decided to actually extend this, not just the gun, but for all the other tokens cross-chain. So
Great.
Very soon you will be able to, with one click, you can sell AVAX in Avalanche and buy ETH and have your ETH delivered in Arbitrum or vice versa. And if ICM is available, ICM will be used in the background. If not, it will be layer 0.
Fantastic.
And another big alpha is these are all EVMs here where you can deposit. Now we said, you know what? Why not? Why don't we bring Solana into this mix?
Here we go.
So we're working very hard, excuse me, to architect it properly. I lost my voice for some reason. I guess this is the top of the hour, so we have to stop. So Solana is coming soon, basically.
Well, we're happy to see that. I think there's some teams building a Solana virtual machine on Avalanche. I don't know if that's true.
I am not sure about that, to be honest.
Well,
I mean, if we can go to Solana directly, it is better. It's more performant, and we can. The reason we need to go to Solana directly because we need to be able to put our simple swap and RFQ model in Solana so we can attract Solana volumes. It's not just to be able to deposit and trade in Dexalot. It's more than that. So they go hand in hand. Just being able to deposit, I'm just going to repeat myself, is we can attract some users, but we cannot attract the majority of the volume. And our goal is to attract the majority of the volume because our spreads are so much better with the people that are coming in, market makers, individuals. They're coming in for prices and as well as for incentive program, and they're increasing the quality of our order books. It translates to bigger volumes in the simple swap and aggregator side, right? And increases our volumes.
Yep.
And all this work, all these things that basically just 5 months ago, we were in DeFi Llama, we were maybe 50th indexes. Now we are comfortably in the top 25.
It's amazing.
With the all-time top 50. We were 15th a couple of days ago in DeFi Llama. And with the new coming futures, we're going to be easily in top 10 and adding new networks. We're going to be easily top 10 in a few months.
Amazing. We can go over if there's other stuff you'd like to chat about, but I just wanted to highlight that for people who are unfamiliar with Dexalot and layer one, like Avalanche layer ones, to say something like that, the numbers speak for itself.
Yeah, actually, I finished everything that I wanted to talk about, to be honest.
Great.
So the only thing is inventory management that I can touch base, but it is a little too technical maybe. But let's just to make it simple, the inventory management piece. If you just think about if you have zero deposits from base, and I showed you the you can deposit from Avalanche and withdraw to base, right? I told it. So if there are zero deposit from base to start with, if you want to withdraw to base, basically you cannot. It will fail because there is nothing deposited. That's the inventory management problem that we have a solution for, but it is not perfect. So we're trying to make it much better so our users can easily transfer funds, come trade in Dexalot, and easily transfer funds at the end of the day, wherever they want to go.
Amazing.
So that's in work in progress, but we have a solution depending on the liquidity. You pay a little extra fee, so it's self-managing in a way.
Have you? But before we end, what's your general opinion on AI trading as we see it sort of expand?
So I'm going to go back. It's going to show my age. 1997. There was I was working with some company, and we were trying to trade S&P 500 futures using TradeView.
Yeah, TradingView.
TradeView, and they had a language, simple, easy language.
Yep.
They had an easy language.
This is TradeStation.
TradeStation, yes, that's TradeStation. Yes, TradeStation. They had an easy language.
It's called OOEL, object-oriented easy language.
Yeah, and they had packages for optimization and AI type of they had it back then.
Yes.
So obviously it is a different time right now, and AI is much better place. And so AI trading, I don't know. Call me old-fashioned. I think it needs a few more years. I don't know if there's going to be, because it's been there for so long. Like since 97, it's 25 years. So I hear it every year or every 2 years, 3 years. There is some AI optimization, all these things is coming. And so I'm a little skeptic because I know the history. So I don't know if it's going to happen like that. That's
Well,
my view.
I'd love to see people running Hummingbot with some sort of AI, just posting trades that it's managed by, you know, a trust on behalf of whatever entity is running it. I'd love to see that.
Yeah, that will be definitely, that will be great. But if AIs are trading with each other, think about it.
That's right. This is what good.
What happens then? What happens then? Everybody, like, they are predicting a pattern and they are looking for that pattern, but every AI is following the same pattern. They're gonna negate each other. So
yeah,
in a way, you can predict in the backtesting. You can have an amazing model, statistical model, but in real life, it turns out to be, it doesn't turn out to be as good. That's my experience. I did that for a living for a while, like I said. So yeah, I'm a little skeptical still.
Yeah, agreed. I just love to see. It's sort of the logical extension of capitalism, right? Like capital without humans, just trading for the sake of capital. It's like a Star Trek episode where the Ferengi exist without money, without gold-plated latinum.
Yeah.
Well, great, Cengiz. This is great. I'd love to see and check back in, like as you guys roll out some more updates in the coming months. I'd love to see it, and I appreciate your time.
Thank you for having me again, and I regained my voice. So that's good. Thank you very much.
Great.